Hi, I'm Sam from Trading Strategies Tested, and today we are going to look at the MACD again. This time we're going to do it slightly differently because we're going to look at one of the so-called secret MACD strategies where it supposedly functions better, gives you better results than simply using the straightforward MACD signal line cross. So let's jump into that right away. Because as you recall from the previous video, I hope you've watched that, the MACD is the moving average convergence divergence indicator, and it basically functions off two simple moving averages and differences between those two, and the way that they move closer and away from each other, hence convergence, divergence, and that's the basis of the indicator. You also have the histogram bars, but that doesn't come into play in this particular strategy, except for simply looking out if the MACD and the signal line are above or below the zero line, which is the basis of the histogram. So let's jump into the strategy, and then I'll show you what that looks like. Then we'll test it, and then we'll see what the results look like and compare it to the original. So this should be quite interesting. I'm looking forward to seeing actually what's going to happen in this case, because this is one of those videos like, you got to try this MACD super strategy, it's like it wins all the time, blah, 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 so let's check it out. So the rules are basic. We're going to use MACD indicator once again. We're going to set it to the defaults. Fast set to 12, slow set to 26, and signal set to 9. And then in addition, we're going to set up three simple moving averages: the 6, the 14, and the 26. So all of them are going to be simple moving averages. In other words, not exponential, just simple moving averages: 6, 14, and 26. All right. Let's just actually move over to the chart because it's going to be easier for me to explain there. So there we have it. You'll see I actually used the same chart as previously for the MACD, the simple strategy, so it's easier, to transfer from one to the other and for us to understand what the differences are. So in this case, you're going to have your MACD and your signal line. So once again, the blue line over here is the MACD, and the orange one above it is the signal line, and the zero line over here, that's the midpoint of the histogram. And the rules basically state that for a cell, we are looking for the same setup as previously. We have a cross from the MACD below the signal line, and they both must be above the zero line. And then in addition to that, we're looking for a cross between the 6 and the 14 moving averages. The 6 is the little blue, and the 14 is the reddish one. So right over there we have a cross for that as well, and both of those must be above the 26 moving average in order for us to enter into a cell. And all three of those are valid here, and that's why this is marked as a cell. And once again, I'll be releasing this indicator. This is a TradingView based indicator, and I might create one for MT4 and MT5 as well. If you want one, please let me know, and I'll look at creating one. And then for the buy scenario, it's exactly the opposite. So the MACD and the signal both need to be below zero, and the MACD needs to cross over above the signal line, and at the same time we want the blue moving average 6 here to cross over the reddish moving average 14, and might be a little bit small over there, but let me try and zoom in. You'll see that it did in fact cross just over there, and both of them need to be underneath the 26 moving average, and that then becomes our buy signal. So that's also the good thing of using something like an indicator like this, is you can't go and cheat and say, oh, it actually only happened over there. No, it happened over here, because this is when the crossover actually happened and when all three prerequisites for the strategy were met. So that's what we're going to go with. And if we go over to the chart over here, you can see that I already have that available. And here it is, it's coded up. And if I open it up, we can take a look at the code. And you'll see over here that I coded exactly that in over here. And I put in 2 additional checks. I said that these two crossovers must happen within 5 bars of each other. In other words, when this crosses, I'm not going to wait for that crossover for more than 5 bars. Okay? Or it's got to happen within 4 bars. So within 4 bars, not 5. Because else it goes, too far away from this event. And, I had to limit it. Just looking at the charts historically, that made sense. That's one of the other parts of the strategy that is not very clear when, these gurus tell you that this is what you have to do in order for the strategy to work. So all of that is coded up and ready to go. You can get a copy of this if you want. Just go to our website, tradingstrategiestester.com, and there should be a link there where you should be able to get it from TradingView. And like I said, I might have a download available for you for MT4 and MT5, depending on whether I've been able to get you that. Okay, so what we're going to do is we're going to go to our starting point, which is always enough. I can get this to show. There we go, right at the beginning. And we're going to go backwards and count 100 instances. Now, if you're interested, for those of you that might be interested to look at what the previous one looked like, I'm going to enable this very quickly, and then we can actually see both of these. The bottom one is a simple crossover between the MACD MACD and the signal line, and the one above here that has the MAs in there is the one we're currently looking at. So you'll see that for the most part, the new signal with the moving averages added to it fires off a little bit later than the original. And there's a lot of them where they actually are pretty much the same. And there's some where the new signal did not get triggered because of our parameters. So if I just do this, you should be able to get a quick idea of what this looks like. So there's a lot of overlap between the two pairs, and I'm going to ignore this one for now. So I'm just going to make that nice and tiny, and then go back to the beginning over there. In terms of take profits, what we're going to do is the same as previously. We're going to do the closest support or resistance, and then take 1.5% of that as the profit. In other words, what it will look like is like this. So here we have the entry point, and we're going to take the one directly after that, because while the candle is active, the MACD might change and therefore might invalidate our trade. So we're going to do this, basically set a stop loss level down there, and then what we're going to do is set this to 1.5 of the risk, and you'll see over there it's calculated for us in TradingView. So risk reward ratio of 1.5. So our target is way up there, but since the market is not open, I'm simply in this particular case going to take that as our result. I'm not going to trade where a signal is very close to the end of the trading day, basically indicated by this dotted line, simply because we're going to keep this in intraday trading, basically, so we're not going to go over that. All right, so those are the rules that I'm going to follow, hopefully correctly, for this, and let's see how it goes. Closing this at the end of day level because we're not going to let it go over to the next day, and this one was too close to the end of the day, so not trading that. So we're going to count this one as a win. In this case, neither one got hit, so I'm going to close it out at the end of the day, which will be a loss of, just make it $1. All right, and it looks like we are on our very last one. And as you can see, in terms of winners and losers, things are pretty close, and it's actually been pretty close for the last bit. And yeah, so this one here is going to be a winner, it would seem. Let's see, this is our trigger point. This is our entry. Stop loss would make sense right about there. That would be very tight, but you know, I'm pretty sure that would have stayed, not triggered. And profit ratio of 1.5, and that makes it 11.7. 11.97. And there we have it. So overall, we have a win rate of 51%, which is, I believe, actually lower than just the regular MACD that we tested, just the straightforward, simple one where we looked at the crossovers. And we have a win rate in terms of money of 63%. And that came to roughly $671 if we are looking at that. So yeah, I mean, it's still going to make money if you apply your money management rules very carefully. So that is certainly a factor. But overall, you know, I'm not sure that it would really benefit you that much to follow this rule versus just the regular MACD simple crossover trading strategy. I just brought in the results of the previous video, and as you can see, the results from the MACD simple crossover test gave us a win rate of 54%, and in terms of the money that we made, it was 65. And currently we're sitting at a win rate of 51% for the supposedly super secret new and improved way to trade the MACD, with money sitting at 63%. So it would actually seem that the super secret settings for MACD is actually worse slightly, or at least not much better than the very simple strategy of trading every time the MACD and the signal line crosses. So that's a very interesting outcome. I didn't quite expect that to happen, but there you have it. After 100 tests, we have a result. So I think in terms of comparing the two, obviously the MACD together with the moving averages basically, you know, filters out some trades. You actually have few opportunities to trade, whereas the straightforward MACD, the simple one where we're just trading on the cross of the MACD and the signal line every time, gives you more trading opportunities. And the bottom line is money management. So as long as you keep your money management under control, you're pretty much gonna, you know, get the same results. I tried doing exactly the same type of entries and so forth for each one. Obviously the entry points were slightly different for each, and I might have done it slightly differently here and there, but you know, that's why we do 100 tests, right? So that we get a fairly good sample size. And in this case, you know, as you can see, we have some very interesting results. So you might as well at this point just go ahead and use the simple MACD crossover. I will try and see if I can find a super secret MACD setting that actually works better than these two, and I'll let you know in a future video. So remember to like and subscribe if you enjoyed that. That would be awesome. So and I hope to see you next time. Until then, stay safe out there, and test your strategies before you use them live. Always. Thank you very much. See you next time.